How to blow up a trading account. Hi, it's Charlie giving you today's video, and today's video is a story. So I'm going to tell you a story from just about a week ago. So I was at a trader show, and I was asked to compare an awards for a trading competition. So they had a trading competition prior to the show where anybody could compare. Yeah, it'd be useful if I could actually spell, wouldn't it? Compassion. Let's get another T in there. There we go, and an E somewhere in there. Competition. So anybody for 3 weeks, I think it was about 3 weeks prior to the trading show, you could open up a demo account and trade on it for 3 weeks, and the winners got prizes. So yeah, it's great, bit of fun, and that's what it is. It's a bit of fun. Is it real? No. Is it real? No. Well, firstly, people are on demo accounts, but also, of course, people are more likely to take bigger risks because they are on demo accounts and there's no management of how much they risk or anything like that. So it's really not real in many senses. The returns that are generated as well, of course, are going to be elevated because people are naturally going to take potentially take more risks on it. Or certainly some people are going to. So yes, you have to take it with a very large dose of salt. However, what was quite interesting, I found, as I was quizzing the winners, was that the actual winner, and this was the funny thing, because the actual winner, I would suggest, had the potential to be the absolute worst trader. Worst trader. Okay. So what was it in what was being said that makes me feel that way? Well, there was a few things. So, of course, I'm asking the winners a little bit about what they were doing, their trading, how they were approaching the markets, etc., etc. And don't take me verbatim on this because my memory is not always amazing, but it's usually about right. So one of the things that the winner said was that she buys support and sells resistance. Right, fine. So as the market comes down to a support zone, then she'll be looking for whatever the signs are, doesn't matter what her signs are, to be a buyer down there, or, if price comes up to a resistance zone, to be a seller up there. That is, decent trading practice for a trader to have that sort of style. So all good so far. And so I said, I can't remember what I said. Something like, about the stop losses. And she said, something along the lines of, I don't use. Well, certainly she didn't use stop losses. Okay. She said she didn't use stop losses. So that was a bit of a flag, a warning flag to me there. So didn't use stop losses. However, she did then go on to say that she hedged. So that's fine. So, okay, you don't use stops, but you have a hedging technique that you use. Fair enough. Okay, we go on. And one of the things she also said, which was another flag, was that she only takes the trades which she knows are going to work out. Now, I'll let you into a little secret, ladies and gentlemen. No one knows what trades are going to work out. We have a sense of which patterns look the strongest, of course, but there's nothing. Unfortunately, we don't know which ones are going to work out. Even the ones that have a strong pattern, we'll feel a lot more confidence towards. And maybe that was what her language. That's what she meant there. But anyway, so she said she hedged. So I said, okay. So if price does go down further, from let's say this is her entry here. So is there a point then, therefore, you put a sell order in there, so then you're effectively hedged? So is there some form of sell? So if it carries on going lower, then she's in a sell as well as a long, and then I don't know, I'm not really into that style, but I do hear of people doing that sort of thing. And she went, no, I buy again. And so Now, ladies and gentlemen, boys and girls, buying again is not hedging. um, Buying again is averaging down, martingaleing, whatever you want to call it. It's averaging into a loser. So what you're doing is, as if your first entry was here and price has carried on going down, then she's buying again here. That is certainly not hedging. And then if it carries on going down some more again, she buys some more. And this is very common in trading because traders want to be right as much as possible. And a lot of the time, price will bounce back up. And once it bounces up, even not even back to her original entry, she'll be in profit. And my point is, I don't mind if someone averages into a position if they've planned for that. So if their first entry was, I don't know, a quarter of a full size, so they are then they've got some other levels that they're saying, well, if it runs a bit lower, then I'll add a bit there and I'll add a bit there, and my stop loss is going to be down here. Okay, so that's a plan. That's a trading plan. That's not what she was doing. So she was doing what the masses out there do, which is get into a trade. If it starts going against you, then you add some more, and then you add more again, and you add more again. That is a surefire way of how to blow your trading account. The annoying thing is that because in the short term and even in the medium term, I've seen people, people can get away with this sort of trading for, up to a year or so, and then will still blow up. Because there's always going to be that time when price doesn't retrace and it just keeps on going. Those black swan events, so to speak, but they're not actually even black swan events because they happen a lot more frequently than a black swan event. But it's going to happen where it doesn't pull back, and then you get trapped in that trade and you don't know what to do. You can't bring yourself to close out, and you end up taking a monstrous loss. So the irony with regards to this story is that the winner of the trading competition was using one of the worst techniques that you can use for longevity. It can make you money in the short term, you can get away with it, but as I always say, what's the point in trading without a stop and adding to your positions if you get away with it and are profitable in the short term, if ultimately you are going to blow up? And I can tell you categorically, you will blow up if you do that, because there is always going to be that move that comes along. So as always, please don't do it. And a good lesson there, I guess, from the story I've just shown, that just to show that, in the short term you can make money. Bearing in mind that was on a demo account, but she was talking about this is how she trades. So and we see it all the time. We see the stats. We can see the numbers in the market of where the average positioning is, and we constantly see that the traders are underwater with no stop losses, and so that's what they do a lot of the time because of this need to be right. And so please get rid of that. Accept having losses, use stop losses, and accept having losses and find a way to trade profitably like that, rather than being right an incredible amount of the time. But what's the point if you ultimately are going to blow up? Have a lovely weekend. By all means, I welcome your comments as always. I'll see you next week.